Today's Monday, February 17th, and this is a chart assessment on Bank of the Ozarks, ticker symbol OZK. And as of last Friday's close, the stock ended the week at $51.86. So the stock market is closed for today's session, February 17th, in observance to President's Day. However, the stock market will start trading tomorrow morning, Tuesday, February 18th at 9:30. So I thought I'd get a head start on this chart review, and kind of struggling through a cold right now, so I'll be muting this periodically throughout this assessment. So here, this is the chart layout at the daily time frame. So each of these red and green candlesticks equals a day's worth of trading. This red candlestick is the closing candlestick for February 14th. The red vertical dash lines are system-generated markers for expiration Friday for monthly option contracts. The most recent expiration was back on January 17th. The upcoming expiration is this Friday, February 21st, and the one beyond that is on March 21st. You can see here that just looking left, all-time high was just hit at $53.64 back on February 6th. Since then, price has just literally been going sideways, unable to break any further or any higher than this local support resistance level I've marked up at $52.39. So price is either consolidating or will ultimately get rejected, or possibly building up momentum and then squeeze even higher over the next few weeks. I do have another local support resistance level sitting at 45.06. So just looking left, it appears this level is also valid. Again, this is all from my perspective. Multiple touch points here as price was rejected. And this is going all the way back to March of last year. So now that I've marked this up, what I've done is I've identified two ideal anchor points for this tool called the Fibonacci time ratio, which requires two anchor points. So anchor point one for this tool will be this green candlestick right here, which is November 6th. As this candlestick broke above this local support resistance level of 45.06 and had some reasonable continuation higher. It really didn't, but anyway, price did run up eventually after another brief consolidation right here. So I'm using this candlestick here as anchor point one for this tool called the Fibonacci time ratio, this tool right here. So the second anchor point, for almost the same reasons, will be this candlestick right here, January 16th, as this candlestick broke above this 45.06 support resistance level and having continuation, and ultimately hitting that new all-time high of 53.64. So this is going to be my second anchor point. And once that's pinned, this purple trend line coincides with this Friday's expiration Friday. So I'm speculating that one of two things is going to happen. Either another leg higher, right, pushing price higher after this month-long consolidation where price is just literally going sideways. Now, the other side to that is that this could actually reject price, pushing price back to the downside, coming down to retest 45.06, possibly heading into the March 21st expiration. So while this pattern does appear bullish, this stock has shown that after moments of or time of consolidation, there is a significant break to the upside, similar to what happened back here heading into November of last year. There was consolidation, and then the break did occur to the upside. Here, however, there was a brief consolidation, a break to the upside, consolidates, unable to go any higher, and then price comes right back down. I'm speculating something like this could happen over here. So I really don't think price is going to break to the upside. So I think heading into this week, I would be bearish on this stock. So I'm now shopping. So switching over to a trader. I don't think I'll be shorting actual common shares of the stock. I haven't really decided whether to short the common shares or pick up option contracts, capitalizing on that March 21st expiration, which is 32 days away from today. I mean, these shares I can short because right here it says ETB, which means easy to borrow, which means if I wanted to short, I can actually short the common shares. But I also want to mitigate the risk because, again, all of this is all speculation. This trend line, this purple trend lines are speculation. These support resistance levels are, again, from my perspective, so they can be totally off. So I thought I would mitigate the risk, and I'm starting to lean on shorting this stock, anticipating a break to the downside using option contracts rather than the actual common shares. So if I was to open or expand on this option chain and looking at the $45 strike price, right? Because the next support resistance level is at $45. And the last quote is 25 cents. As a buyer, I'm buying the ask. So under the ask column, the last premium quote is 25 cents per option contract, and that's what it would cost me. And right here under open interest, there's a little over almost 900 contracts that were already picked up. But the probability, this last column right here, probability of in the money, ITM, it's very low. It's less than 10% being successful. So I'm contemplating whether it's staying with the $45 strike price or the $47.50 strike price, as that is, this has a option premium of $50 rather than $25, and it has a lower open interest, but it is almost doubling the probability of success. So I'm not sure which of the two, but I'm looking at one of these two strike prices. And the caveat to this is that when buying an option contract, the multiplier is 100 to offset the number of shares per option contract. So it's 25 cents times 100 shares. Then this is actually $25, not 25 cents. So that's something to, and again, if I was to pick up an option contract, I don't think I'd risk more than $200 into this trade because this is a new strategy I'm currently working on, and I don't want to overcommit on this position and only have price continue trending higher. So again, I thought I would just mitigate the risk. So as the week progresses, heading into expiration Friday, if or when I decide to enter a trade, I hope to capture that as well. So this recording is just for future reference, and more to follow. Today's Friday, February 21st, and this is an end of day or end of week review on Bank of the Ozarks. So as of today's close, the stock ended the week at $47.45, and in overall trading, the stock was down $1.95. So again, the purple trend line coincides with expiration Friday today, and as I was anticipating or as forecasted, there was a probability that price is going to start fading to the downside at or a little after expiration Friday. And in this case, it started fading starting February 18th, the day after I did the initial review on February 17th. And we can see here that past week, price has been trending lower. And Tuesday, when the stock market opened, I actually jumped into the trade. Unfortunately, I didn't get a chance to record it because I thought I would just record it on expiration Friday. So this past Tuesday at the open, I entered a short position when Bank of Ozarks was quoted at $51.87. So this is just a reference point as to where and when I took entry on that short bias trade. So with that, switching over to the trade tab. So here under the option chain section, there's a flag position pegged to option contracts that will be expiring on March 21st. And down here at the bottom left, I did select the $47.50 strike price, not the $45. And under quantity, I've picked up 5 of these contracts, and there's 28 days remaining. And until these contracts expire is worthless. My entry price, I was able to grab these contracts when the premium dropped to 43 cents because the last quote was at 50 cents this past Monday when I did this review. And since entering the trade, the option premium has increased as the stock price is dropping. And as of today's close, it was $1.67. And the P&L, the profit and loss side of the ledger, is reflecting a positive balance of $619 since entering this trade. And if I click on the timestamp, I took this trade on February 18th at 9:30, like 49 seconds after the stock market started trading. I picked up 3 contracts. And then added a second, the next 2 contracts for a total of 5. So now that I've provided a status on the overall position and the option contract, the last thing I want to recap is the valuation on this position. As I mentioned earlier, I didn't want to risk more than $200 on the trade. So again, just to show here, my entry price is quoted at 43 cents. And as each option contract is equal to holding 100 shares of the underlying security, that's what the 100s are pertaining to. The multiplier is 100. So that means one contract is actually valued at $43. Remember, this past Monday, this was quoted at 50 cents. So as the price dropped, I was able to enter the trade. And having picked up 5 contracts, not including commission, I'm risking $215 over the next remaining 4 weeks before these contracts expire is worthless. So I was fortunate enough to conduct this assessment, and it appears that there is, I mean, I can't say that the Fibonacci time ratio is the be-all, end-all. This is still a new tool I'm learning and navigating through, so this is a great start for that. So until something more significant does occur, like if, for example, price falls below 45.06, the next support level, I'll do a follow-up status. But yeah, so far so good. So more to follow. So quick update. Today's Monday, March 10th, and status check on the Bank of Ozark short. As of the time of this recording, the stock is quoted at $45.31. And well into today's trading session, the stock price is down a little over 25 cents per share. So as I was anticipating, there was going to be a pullback as the market was heading into, or specifically as the stock was heading into this February 21st time frame. And price has found support here at 45.06. As we can see for the past few days, price has stabilized after pulling back a few days, and here this could just be another consolidation before running back even lower. I did mark up another support level of 41.40, which coincides back in the early January support back here, and then looking further left, we can see that 41.40 price level has found, or price has found support around this price level here. So if price does continue fading lower, then this is where I think price may come down to before seeing any reasonable bounce or recovery. And if that does happen, I'm speculating even further that may occur sometime after the March 21st expiration Friday for monthly option contracts. So with all things said, switching over to the trade tab, the P&L, the profit and loss side of the ledger, is reflecting a positive balance of almost $1,200. The option premium is quoted at $2.83. My entry price is at 43 cents. And with 11 days remaining, I really don't want to push my luck too much, because if there's going to be a recovery, then it's possible that $45 support level could hold. because again, I just don't want to press my luck and wait for price to come down even lower. So I am considering closing this position out today, as there are other securities I'm looking at as the market is pulling back. And we can see here, Bitcoin, BTC, it's down to $80,500. And since the futures market started trading last night, Sunday evening, it's already down a little over $6,700. So that could bode well for a further pullback in the S&P 500 as well as in Bank of Ozark. But again, I don't want to drag this trade out too much longer. I was able to capitalize on the initial drop. I think that's more satisfying there. So with that, I am looking to place an order to close this trade out. So switching over to this page right here, this split screen is involving two different charts. The chart on the left is the Bank of Ozark daily chart, which is what I was covering a little while ago. The chart on the right, it's specific to the option contract that I'm holding, is right here by the ticker. The ticker symbol is OZK, which is the stock chart for a Bank of Ozark. 25 is the year, 03 is the month, 21 is the expiration date. So this is the March 21st expiration right here for monthly option contracts. The strike price is $47.50, and we can see here that last Friday, when price spiked to this low point here, where price touched $44, the option premium was quoted at $3.90. I was looking to close it out at that point, but I just couldn't shake it out of my head over the weekend. So I thought, while it's here, as the market is still pulling back, I'll go ahead and place an order to close this out. So opening up active trader, I'm going to see if I can close this out here at $1,200. Again, I'm holding 5 of these contracts, right? So there's 5 contracts. It's about $6 away from my $1,200 target. So with that, I'm going to say I want to close out all 5 contracts at the strike of the option premium of $2.85. That's a little over $1,200. So there's my limit order sitting right here on the option chain. And it's literally at the support level of 45.06. So if price can just dip back a little lower, that should be enough to close this trade out. If I show trades, there should be confirmation bubbles showing I've picked up those 5 contracts. Yeah, I'm not sure why it's not showing here. But in any case, that's the status of the trade. I am looking to close this out today, hopefully. So until this order is filled, ideally I'd like to capture it. But if not, I'll update accordingly. So a quick update. It's been a few minutes since the last recording, but I did amend my limit order. I did walk it up higher. So right now, if I scroll up, my limit order is sitting at $3.45 for a net profit of a little over $1,500. So that's where it is right now. So if I was to sell this, yeah, so it's got a few more to go. So that would essentially put price come back down here, heading towards to last Friday's drop. So we can see that price is now starting to fade even lower below the support level of 45.06. It's only about a nickel away from doing that. So for the purpose of the time, I'll pause it here and I will try and capture, again, the recording of closing this trade. However, if not, I'll just I'll do a quick status check after. So quick update. As we can see here, the current spot price on the Bank of Ozark is $44.40. And since the initial recording this morning, price has fallen even lower. It's currently down $1.16. We can see that price did fall below the support level of 45.06. This was enough to close out the position. If I switch over to the trade tab, the position is now 0. Under quantity is 0. P&L is 0. So switching over to the chart again. So here's a confirmation bubble showing that this position was closed out at the premium of $3.45 for that $1,500. And if I open up active trader, position is flat. So I am out of the trade. And just to, again, recap, my closing price is at 345. Multiply that by the 100 shares per contract. So each option contract was sold at $345, and I sold a total of 5. So overall, the gross profit was $1,725 minus the $200 or so for the cost of getting into the trade. And that has the net profit of a little over $1,500. I'll provide a breakdown at the end, but I was fortunate enough to see that there was a drop coming prior to or on February 21st. As we can see here, that leading into that drop, there was a major bounce back on January 13th where price just went vertical, found resistance at 52.39, price literally just going sideways. And this move here from early January could just be totally reversing heading into expiration Friday. So even though there's a few days remaining, it's possible that price will come down to 41.40. At that point, I really don't mind leaving money on the table because I have other trades to get into, and I didn't want to have too many trades out in the open at this point. So yeah, I'm fine with closing this out at $1,500 profit. So until the next setup, I'll see you.